The U.S. Senate has just approved the Stablecoin Genius Act, putting the country one step away from the biggest crypto transformation in history, while the SEC brings on two senior officials with deep experience in digital assets. But despite these bullish developments, I'm going to explain why the major investment funds are aggressively selling Bitcoin right now. The Senate voted 68-30 in favor of the Stablecoin Genius Act. From the Senate floor, Senator Hagerty declared, "With this bill, the United States moves one step closer to becoming the global leader in cryptocurrencies. Once the Genius Bill becomes law, businesses of all sizes and consumers across America will be able to settle payments almost instantly instead of waiting days or even weeks. If payment stablecoins gain recognition under a U.S. regulatory framework, it could literally open the floodgates for companies to issue their own tokens. Reports even suggest that Apple, Google, X, formerly Twitter, and Airbnb have been quietly exploring the idea as the Senate debate unfolded. What's more, a host of major banks and traditional financial institutions are lining up to integrate stablecoins for payments and settlements. If issuers start holding large amounts of U.S. Treasury bonds, their role shifts from niche instruments to key players in the broader economy. We were already discussing this just last week. The crucial point for the United States in approving the Genius Act is that much of stablecoin issuers' reserve value is tied up in buying and holding U.S. treasuries. In other words, this law will effectively drive demand for U.S. government debt, funneling funding into the country. By enabling all institutional U.S. infrastructure to issue and use stablecoins, it ensures that big players will embrace them thanks to the multiple benefits they offer. Instant, cheaper payments, available 24/7. And we're now just one step away from passing a law that will bring full regulation and institutional backing from the government, complete with guarantees for building out this entire new framework. That means big banks and major private companies won't even hesitate before working with stablecoins. And of course, that will trigger a huge surge in stablecoin usage. From where I stand, we're talking about mass adoption that starts in the United States, but will inevitably spread to the rest of the world, though unfortunately we might have to write Europe off for now given its zeal for restrictive, even prohibitive regulation. Still, we're bound to see a massive uptick in institutional use, and as a result, retail use. People may not even realize at first that they're dealing with stablecoins, but make no mistake, everyone will be using them. And here's the kicker. Donald Trump and his administration may very well chalk up the biggest win of his second term, yes, even in his first year, because I genuinely believe this will have such a profound global impact that it could end up being the best thing he does for his country. I think that overall, people aren't recognizing the impact, not just the benefit it will bring to the United States, but the effect on everyday citizens' lives. In a sense, money is being redefined, and Donald Trump is racing to make it happen. He's urged the House of Representatives to pass the U.S. National Stablecoin Innovation Act as soon as possible so he can officially sign it into law. In a Truth Social post, Trump said, "The Senate just passed an incredible bill that will make the United States the undisputed leader in digital assets. Get it to my desk ASAP. No delays, no amendments." It's important to know that the next vote will be in the House of Representatives, where Republicans also hold a slim majority over Democrats. Many Genius Act supporters believe it will play a crucial role in preserving the U.S. dollar's dominance in global finance, and I honestly agree. Now that the Senate has given its approval, all that remains is for the House to speak. With a Republican edge there, passage seems likely, and then it's on to Trump, who's eager to sign it into law. We're not there yet, but we're extremely close. In the meantime, Donald Trump is supercharging the U.S. regulatory landscape with fresh pro-crypto hires in key positions because the Securities and Exchange Commission has just announced several new additions, all with deep experience in cryptocurrencies and blockchain. In a Friday notice, the SEC said Jamie Selway will join as Director of Trading and Markets. Selway served as Global Head of Institutional Markets for Blockchain.com from 2018 to 2019. Brian Daly, a partner at Aiken Gump, Straushauer and Feld, LL, with crypto expertise, will also come on board leading the Commission's investment management division. I'm beginning to wonder if Bitcoin's creator, Nakamoto, is actually Donald Trump in disguise. And with all these changes, especially at the SEC, Reuters reports that Coinbase's chief legal legal officer, Paul Grewal, has said the company is seeking SEC approval to offer tokenized stocks, potentially taking on traditional trading platforms. Grewal apparently emphasized that this plan is a top priority for Coinbase, and this is something we've also been discussing over the past few weeks. We're about to enter a world where asset tokenization becomes a standard. Less extreme and far more measured, but similar in spirit to the NF boom. Of course, it won't share all the same properties. I'm speaking conceptually, and this opens the door to trading and peer-to-peer investing in a very aggressive way. Though it shouldn't surprise us if in just a few months we see platforms like BitJet, BinX, or BitUnix offering tokenized shares of companies or even tokenized real estate investment platforms, among other options. Although some firms already offer tokenized securities, to an extent the reality is they must do so in a way that, while not exactly covert, justifies the creation of each token, with the notable exception of memecoins, which frankly could care less. What we're really talking about is a far more serious, regulated, and government-endorsed form of tokenization, and that, in turn, will spark a massive crypto expansion. So let's call it what it is. There's no question that Donald Trump is doing a ton to drive the development and mass adoption of cryptocurrencies, not just in the United States, but around the globe. That's a fact, and it's not up for debate. Now, let's turn our attention to the Bitcoin chart you're seeing on screen. That's the 4-hour time frame. It's obvious that Bitcoin's powerful uptrend is rock solid. In 2025, this strength is crystal clear, but you'll agree with me that back in 2022, not everyone was so bullish on the ecosystem. We'd come off the 2017 mania, then the 2021 rally, and at that moment, the sentiment was deeply pessimistic. We were right in the heart of a bear market. Now, let's break it down. A massive impulse in 2017 was followed by a very aggressive corrective pattern. Then in 2021, we saw another huge bullish run, again capped off by a sharp correction. The move from 17 to 21 was even bigger, and now we're in yet another strong bullish impulse from there. So what were we saying? We're clearly in a bullish trend on the Bitcoin chart, but this rally can't go on forever, even with all the good news we've been sharing about the ecosystem. Now I'm going to explain the risks in the Bitcoin and crypto markets, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's focus on the here and now. Zooming in, you'll see this powerful bullish impulse in Bitcoin's price and how we've marked out a defense zone. Notice that big investment funds have agreed on this price level as a line in the sand they'll defend at all costs. Just look at how the price keeps reacting around these structures. What really stood out during that major bearish attack was how it fell short. In earlier videos, I showed you a structure, something like a rising channel that justified this contact point. Now, with that context, we can dig into the specific dangers lurking for Bitcoin and the broader crypto market. But if we give the price a bit more leash to express itself and move freely, we have to allow it the chance, if Bitcoin wants to, or rather if the big investment funds want to at least come down and touch the defense zone. The buying pressure can absolutely accommodate those touches. In fact, they defend them and nothing really happens. I'm just pointing out that over the medium term, if the price dips a little, there's no real issue because the prevailing bullish momentum would keep dominating without any problem. Now let's zoom in and pay close attention to this drop in Bitcoin's price. Notice the volume and look down here at the delta, how this candle was sold off in a very, very aggressive way. Yet we can see that the price action didn't go much further beyond that. What's more, this absorption did drive the price into that move, but what really stands out is that the longs, the buying side, were unable, even after that massive absorption, if this is indeed just a pause, and it very well could be, to push right back into an immediate aggressive continuation. At the very least, this suggests we might keep oscillating, bottom to top to bottom, in a back and forth pattern. Right now, we're in no man's land, having just come down from the highs, so there could be another leg lower. Yet, Yes, it's telling that buyers absorbed sellers to lift the price, but seeing that lack of follow-through buying power makes me think we'll keep swinging from side to side, and we're probably about halfway to simply touching back down on this kind of structure. What I'm talking about here is that buying force that couldn't carry the price to new highs and what that might imply. Next, I want to show you a volume profile chart so we can analyze this scenario in much greater detail. Look, we're seeing Bitcoin's price up at the same highs its current quote, and here we're plotting a volume profile on the 1-hour time frame to pinpoint within each segment where the greatest trading volume lies. And here's what stands out. First, it was all that buying force that drove Bitcoin's price upward, right? That's why we've been working with a defense zone around this level, because the very players capable of pushing the price higher are the ones defending it at every turn. They're blocking further advances, not letting price slip through, since there's a clear intent on the part of buyers to keep pushing upward. In fact, the long-term thesis at Crypto Insight is exactly that. Bullish over the long haul, though not necessarily in the short or even semi-immediate term. Notice how we've seen a bullish POC migration here, not once but twice. And in this instance, that migration held at the same price level. You can see how the buying force is leading the orchestra, taking control of the markets. But notice how the POC migration then fell, only to re-equalize. And even now, as it develops, the market is still leveling it out. In itself, this shouldn't alarm us or signal anything dire, because we remain within a defense zone. The POC migration alone doesn't warn of anything. The price could dip here, create a new POC level, gather strength, migrate again, and continue higher, so there's no inherent problem. But what is problematic are these two price spikes in Bitcoin that have failed so spectacularly. Why? It starts with the poke at $104,800 right here. When investors tried to find value at higher levels, the time frame was so brief that they couldn't establish value where they had it before, which is crucial. When they revisit those areas, they can't preserve value to push higher. They're immediately rejected. The goal? To rediscover value at the previous point of control. Here we get another shot from the buyers, the buying force. You'll see the price rises, but this time it spends far less time, an almost negligible amount, trying to find value, and critically, it fails. What's more alarming is that for the third time in a row, value is only reestablished at that same control point. What does that tell us? It means the two prior attempts to breach those familiar zones where value had once held for a while because there was real trading interest were utterly rejected. In other words, no. Bitcoin's true value lies at lower price levels. You're not welcome here. That's the market message. Now let's zoom in to Bitcoin's most current price action. Today's session is pivotal. Ever since this morning, the tone has been decidedly bearish. The question now is whether the selling pressure can fully execute its downward direction. So take a look at this volume profile. After all that trading, today's POC sits at $104,720. You can see it here in yellow. I know it looks a bit small, so we'll zoom in to make it clearer. But what you're seeing is that after the POC was pierced to the downside, price came back for a pullback, touched the POC, and then got rejected immediately. What does all this tell us? Basically, if price can't break back above the $104,700 level in the very short term, we're quite likely to see an aggressive bearish collapse. And to make it even clearer, I'll switch over to a conventional chart. What I'm saying is that this current impulse could find its mirror here, and that's where the massive Bitcoin collapse could happen. If price fails to reclaim the $104,700 level soon, the goal would be to hit that defense zone, which honestly wouldn't be the end of the world. In fact, if they wanted to set a trap there, I'd almost welcome it, because we'd still remain bullish at Crypto Insight. But we do acknowledge that a bearish correction in Bitcoin and across various altcoins could be on the card. Will that correction start today? Well, it all depends on whether we can break back above that level. If we do, it simply means Bitcoin needs more fluctuation, maybe an institutional one-to-one target, and then off they go. Of course, there's no way to know exactly how they'll play it, but we have the tools to tell if it happens today or not. And keep in mind, all of this ties into what we're watching in equities, the SP 500 in particular, as we try to determine whether this breakout is real or just another false move. We're bracing for stocks to drop, which is why we're also expecting Bitcoin and crypto to follow suit. Will this breakdown be genuine, or will it end up as another head fake? Some climactic action, then a crypto collapse, and finally a rally hand in hand. That's the million-dollar question. question. So tell me, are you bullish or bearish? Or maybe you're a market contrarian at heart? Let me know in the comments. And if you found this advanced technical analysis helpful, hit the like button, subscribe, and click the bell so YouTube can notify you of future uploads. Good luck with your trades, and I'll see you next time.